One voice, brawling enough.
I've money on my brain, thought what you're saying. Ice and chains, fly out of plane. I've money on my brain, crypto, all you're saying. Talk out with the cool, man, I swear to the lane. Ice on my neck, that shine like a gem. If you don't talk money, man, I know what you're saying. It kinda hot, just body stocks. Dance with the 100, what I never gas. I went out the hood, not out the app. Full up be a cheddar. Every day that we are my.
What's up, guys? Welcome back. Malik here, and from yesterday's video I already told you I'm not making any trades on FOMC, so I definitely wanted to employ that discipline and not make any trades, sticking to the plan, because I see that sometimes on these days it's very wicky, where it can take you out both top and bottom side depending on where you go. It gets you out on both sides, but then overall today, what would have happened today? You'd have been very range bound today. What you could have made out from was from 12 midnight. If you had shorted, you probably could have taken it down at 11. If you didn't get stopped out and didn't move your stop loss to break even, you would have been able to make some money until 11. But then by 2 o'clock, you'd have been stopped out. And then if you had even tried to trade after that, if you didn't catch this sell, you'd have been stopped out on your buy side position, depending on how long you held it and what was your bias. So you can see I made no trades overall today. The only open trade I have is the one for tomorrow that I'm actually up $7 on, with, as you typically know, my max risk is around 20. So that's basically it. And then let's get into, I'm going to skip a portion, but I'm going to skip the watch list for now. But let's get into what caused this big movement here, because I think this is very important to know, especially if you're somebody who wants to trade stocks and wants to really have a better understanding of what's going on. So I'm actually using Grok, which is Twitter's AI, and it can actually scour Twitter for information and kind of develop an understanding of what is happening in the real world. So it's interpreting real world information and able to compile that and give me something that I can actually transfer to you. So on Grok, I asked, what did the Fed and Jerome Powell say today about interest rates and the economic forecast? And basically said the Federal Reserve, under the leadership of Chair Jerome Powell, decided to keep interest rates unchanged at the highest level in decades during their meeting on May 1st. The decision to maintain rates was largely influenced by the Federal Reserve's ongoing efforts to curb inflation and the challenging economic conditions, including high inflation rates that have stalled at around 3.5% on an annual basis. So they're basically saying they're going to probably keep interest rates at the same level. So it's higher for longer, something that the Fed has been saying for a while now, but it's going to stay there instead of getting an interest rate hike. So the market can take that two ways in terms of what we're seeing now, as in how high the market has went. It has been basically done in a high interest rate environment. So it's like the only place it can go from here is up, unless the only reason the market went up was because everyone was expecting rate cuts, which would have mean more easier financial conditions. So if everyone was expecting rate cuts and the market went up in anticipation of that, we might see a sell-off. But I'm thinking it can go both ways. It can be the market is resilient and is able to strive in this high interest rate environment, or the market was expecting rate cuts and only went up in expectation of that, which would mean the market would sell off some more, because there was a narrative that we would have rate cuts this year, which would have been an easier, less tight economic environment, but we don't look like we're going to have that anymore. let's see what other things they said. So in terms of economic forecast, the Fed's projections for the federal funds rate suggest a median value of 4.6 for 2024. So that's pretty high. 4.6 is pretty high. I think we're at like a 5 point. And I don't even have to guess. I think we're at like 5.2. Let me see. What is the current Fed funds rate? Grok is fast too, so I like it. So the current Fed's funds rate is 5.25 to 5.5. So if we have a median, that means that interest rates can come down a little bit, but not a lot, because we're trying to hit that median. So that's the middle, or probably the average. I forget what median means. I think it's middle. Means what? Median. I think that's middle. So it's actually the middle value. So the target that the Fed is actually targeting is 4.6 in the mid range, right? So Powell has acknowledged the current economic landscape presents a complex set of challenges. While the economy has shown resilience in certain areas, such as spending on services, other indicators, particularly the job market, have raised concerns. The Fed's decision to hold rates steady reflects a delicate balance between managing inflation and supporting economic growth. The one thing I can say about this is that if rates remain high, we are more than likely going to see banks break, like more regional banks break, and you'll see that in KRE. With KRE would probably go down lower. That's why you had this big sell-off here. And KRE is actually a regional bank ETF. So a lot of the regional banks actually bought bonds to kind of secure their investments. And then when the rates go up, the value of bonds go down, but the rate that it actually pays, it goes up, and that causes you to be underwater and not being able to pay out people. Say people are withdrawing money or need to make loans or stuff like that. It kind of creates an insolvency problem for the banks. So that's basically what happened today, where we had that big push up and sell off in the market. And you can see this was at around 2 o'clock. 2 o'clock was the meeting. Looking at the watch list now. So the watch list at BTC, we have BTC at 57. So I had drew a level yesterday, kind of tapped my level a few times. I'm thinking we're going to go into it. We don't have to, but it's possible. But you can see it has tapped my level multiple times, using it as some form of support. So let's see if it holds. Tesla, I'm pretty sure we had sell off today. Well, not much. It's the same as yesterday at 181.10. This one is IMMR. I'm thinking a little higher. No, nothing really, just down 0.1. So we're at 7.19 on IMMR. Bitfarms, I think lower. Nope. Bitfarms actually went up a bit. This one is funny, but overall it's much lower than where we have been trading. If I had held this, I would have been very much underwater by now. Nvidia is at 839.15. So Nvidia is down a little, but we can actually look for them to come up as they have earnings. That's something that we should definitely pay attention to. Nvidia, that has earnings on May 22nd. SMCI had poor earnings, so you can see that has affected some of the chip stocks. AMD is at 144, so it's a bit lower than yesterday. SMCI, are we in the 600s? SMCI is at 738, so a bit lower from the earnings, but still possible for it to go up from there. You can see it actually fill this entire gap. Wow, it filled that gap, so we can probably look for it to fill this gap that it has now created. But if you actually, that's a after hours gap. So if you actually put all of the price action, you'll see that it's not really a gap. It's just not showing you that extended hours price action. See if I can find it here. Extended hours trading. I'm not seeing the extended hours. I found it the last time, but now it's like super hard to find for some reason. Extended price line for positions and orders. Nope. I'm not seeing it. So I'm not even gonna put that then. But this is a gap that you can definitely see it trade into. And then what will I say about the narrative on today? So it's gonna be more based about the FOMC, because that's what happened today. So FOMC day overall, Jerome Powell said we will remain higher for longer, but no rate cuts or hikes, which is neutral. Let's see how market takes it. That's what I'll say about today. It's basically it. As you can see, I'm in one trade for tomorrow already. So looking for that to go up. If I get stopped out for $20 loss, it's whatever. I'll do one more trade at about 9 to 11 a.m. See how that goes. If this one is able to run, I'll just let it run. But if it's not, then we'll look for Friday for the next trade, right? And then by Friday, I'll be able to take profits on the next account and actually continue it. And it's a funded account. So once any profits I make on it, I'll just be able to withdraw. So we'll see that happen as the days go by. And that's basically it. I'll see you in the next video. Bye bye.